Hello everybody, thank you for watching if you're watching. Before I plod on, I just want to say that these are just my perceptions. There's no guarantee of any capital gains increases from this talk. These are simply my perceptions. I want to quickly talk about the FTSE 350 banking sector as well as the FTSE. I'll move the screen over now to some charts. So up on the screen we have an index of the UK banking sector. This is a 10-year chart. We can see 10 years worth of trading, and here we have labelled COVID-19. This was the pandemic. Now on a chart you have certain areas, we call them support and resistance, supply and demand. Doesn't matter if you're looking at FX, commodities, stocks and shares. Charting is a way of technically analysing statistical price movement. And we have up on the screen a FTSE 350 banks, which is an index for the UK banking sector. We can see certain areas on the chart where things do certain things, the price does certain things. Now, this is the low, okay? So we had this support area priced 3000, an area of strong support. So this is an area in which you would be buying the market if the price ever came back down to this level. And we can see that during February and March, we didn't get the bounce, we just sold off because this was the third time that they'd retested this area of support. Now, when an area of support fails, the price hunts for a new area of support. And we can see we got a bit of support down at 2155. And the market started to rally on up, but then it sold off even more, down to the lowest the banks had ever been in their history. But what does that mean to us, the people? Now, this is a representation of the bank's share price, which is a representation of the monetary value, the market capitalization the company has, how much money the company has. Now, when you see green, they've got more money. When you see red, they've got less money. So a bank is a business, it's a private organization, and its sole purpose is to make money. But it's made up of blokes similar to myself, I guess, and sometimes we make risky investments and they pay off and make a whole heap of money, and sometimes those investments don't pay off. Now, for the likes of Lloyds, HSBC Nationwide, it's the same story, as obviously this chart is an index for a collection of banks, and we can see that Lloyds went to the lowest it had been for a very long time, and they didn't have a lot of money. So the point of this video, we can see now that the chart has rallied to a point of resistance. Now it looks to me like the chart needs to come back down and find a support, which means hundreds of billions being exited out of the banks. And you're probably going to ask, well, how does that happen? Well, just like any private company, public company, if you buy shares of that company, you become a shareholder, part owner of that company. Now, obviously, it isn't us little guys moving these charts, you know, so it's big hedge funds and investment institutions that have took advantage of the low share value price of the banks. And if it was me, I would be taking profit at resistance. And if you look at the chart now, we're starting to go red, which means that they're selling off their positions or shorting the market, which is making money on the way down. You press sell. To make money on the way up, you press buy. Now, we predicted that the next lockdown was going to be in October. I was pretty confident that we would be coming out of lockdown through the summer months, but Boris has clearly said yesterday that the restrictions are not being lifted. Now, I really don't think they were ever going to be lifted, because when you lift the lockdown, that's the pandemic over now, isn't it? Okay, so let's not get too much into the conspiracy theories. Let's just focus on the chart. Now, if we're expecting a big sell-off in the banking sector, that means those banks are now going to have hundreds of billions of pounds exited from their companies. Now, a bank never has the correct amount of money. I mean, they work on what's called a fractional debt-based banking system. I can go further into that at another time, but effectively, if just 3% of the UK population went and withdrew their funds at the same time, it would cripple the banking system, and that's when they got vaults full of cash. Now, if you haven't got enough money in your business, in your bank, it doesn't matter what's shown on your account. It doesn't actually mean the physical cash is there. Then the business doesn't have enough money to continue business, which means they have to slow down the business, which then has a knock-on effect throughout the rest of the economy. Many of the businesses, they're only a month or two in advance. Many businesses run their businesses in the red, relying on overdrafts and loans. Now, if the banks don't have enough money to continue loaning out money, then you will need to shut down the economy a little bit more. So over the coming weeks, I'm going to be watching this banking sector to see how viciously the market sells off. Now, there is a point of support down at 2686. So what we're going to do is we're going to stick a line across this area of resistance, okay? And we're going to see what happens when the price drops down to 300 pips. Now, you could make money on this. You could sell this market by pressing sell. And £1 a pip, £2 a pip, £10 a pip, £1,000 a pip, times 1, 2, 300 pips would give you a lot of money. Now, if I was a multi-billionaire and I was running a hedge fund, this would be a market I would be looking to sell, especially listening to the news that the restrictions are not being lifted. But it's just a funny coincidence that the banking sector has reached a point of resistance. The market has started to sell off for the last 3 weeks, and Boris has come out and says we can't lift the restrictions. Now, obviously, I don't claim to know it all. All I do is add up certain bits of data and try and find the most appropriate answer, the most logical reasoning for the physical actions. And when you see the banking sector selling off and the country not coming out of lockdown, you can add up one bit of information, the other bit of information, and it gives you a logical explanation. So this is of key interest to myself over the next couple of weeks, watching the FTSE banking sector. You know, I'll be watching Lloyd's. Lloyd's is struggling. As we can see, Lloyd's got to a point of resistance and has sold off. Granted, that's not a heavy sell-off, but they have started to turn the price now. There isn't a really strong support until down at 33.6, 33. That's the next area of strong support. So if you was looking at buying Lloyd's, you'd want to wait to see a turning pattern. If not, the chart is most likely going to head down. But let's have a look at the FTSE 100. So, you know, I've not changed this chart in a very long time. I'll keep this one the way it is, just because I've written this on there. COVID will go away from mainstream news, and commerce will begin once we're back in this level, lockdown free. Now, we all saw lockdown restrictions lifted slightly when we broke through this 6,500 level, just as we was calling all the way through the year. We've broken through the 7,000. We've got a big heavy sell-off, managed to sustain the price. The price is now starting to rally. But if we look over to the left, we have a few key areas of resistance to break through. But what the hell does this FTSE 100 actually mean? Well, this is a collection, an index for the UK's top 100 performing companies, the companies with the most market capitalisation, the biggest companies in the UK. And green is money going in, red is money going out. And this big sell-off here, as you know, those that have been following me, was hundreds of billions exited out of those top performing companies. Now we can see that the market has rallied on up to a point of pre-COVID trading levels. But the pound, our great British pound, is going to go through a heavy sell-off period. So we are now selling the pound down from 141 down to 14, so $1.40 to your pound. And then we're most likely going to head down to the 138, which is $1.38 for your pound. Now, the pound lost so much value during the COVID market sell-off that it was the lowest it had been since 1986, which means if you're buying goods up here, you've now got to sell them for a lot more just to get the same money back. Money and value are two separate things, very, very different things indeed. If you don't believe, we can look at the value of your pound changing. So we sold this market this morning and we have a target of 140.50 and then 1400, because we can see the dollar picking up, gaining strength in value, which means our pound is now going to lose strength, okay, becoming weaker in value. Now, if you stick this on a weekly, we can see now that we have got back to an area of strong resistance. Now, to break above into this area would take a massive catalyst. There would need to be an exceptionally good reason for us traders to start trading the pound higher than the 1.42. Now, for the last 1, 2, 3, 4 weeks now, the pound has just been stable in a range. It's been a ranging market, but now we are being let out of lockdown would be a good reason to sell it. Now, if you was to sell this on a longer time frame, you would possibly be hunting for a $135 on the pound, which is currently just under 600 pips. Now, if you sell that at a pound a pip, 600 quid, £2 a pip's 1,200 quid. But I think now that the charts, the markets are at a point of taking profit. So that was a quick little brief through the pound, the FTSE 350 banks and the FTSE 100. Obviously, if you would like to know more, you can log on to www.evolvingtrade.com, or you can get in my inbox and I'll be happy to point you in the right direction. I strongly urge everybody that knows nothing about this to start learning about this, as I can 100% guarantee you that the world revolves around money. And if you don't understand where the money is traveling, you couldn't understand the destination the world is heading. So thank you very much for listening. Again, if you've got any questions, feel free to get in my inbox, get in the emails. I'll be happy to point you out in the right direction. Thanks very much.